That's up 44. All right, Blue Line Futures, Oliver Slope. Oliver, you know, I'm looking at all of these markets for the most part in the red, but wheat really taking it on the chin.
Wheat is taking it on the chin, but as you had mentioned, looking at it, zooming out and looking where we started the month and where we're at now, we're still in a good spot in the path of least resistance, and the trend is still higher for the time being. We've gotten a nice, healthy pullback over the last couple of sessions, including this morning's trade. The key level to keep an eye on for us in that May contract is going to be 585 to 590. That was kind of the breakout point from February 14th. And still marks a higher low. So if we can defend that, I think that keeps the trend of higher lows and higher highs intact. A break and close below there, and maybe you start to neutralize some of the bullish technical landscape that's been shaping up here over the last month. Now, the corn and soybean markets, I think a little bit different story. I think there's a little bit of something for everyone here. So still friendly wheat. Corn market, on the other hand, as you had mentioned, working on a second consecutive lower close. What we're watching is a close at the 20-day moving average. We have not seen consecutive closes below that since the first week of December. That comes in at 503.5, and it's one of those things where it almost becomes self-fulfilling prophecy when you have a lot of fund traders that pay attention to these moving averages and technicals, where you start to see that you've got funds with a rather large net long position. You break below some of these levels, and it starts to feed on itself, and you've got some outside market weakness potentially spilling into that as well. So if we can't stabilize near $5, the next downside objective in that May corn, 481.5 to 484.
And obviously, we're seeing pressure there in the beans as well. But you look at that 6-month chart, and it just shows that we've come well off of the lows back in the first of the year there. So let's take a break, come back in just a moment, and we'll look at livestock futures with Oliver Slope. Market Day Report continues in a moment. And a little lower on the June contract. Again, Oliver Slope. Blue Line Futures, what are you watching in the proteins?
Well, we did have that cattle on feed report out on Friday afternoon, and as you had mentioned, that was, I would classify it as neutral to moderately bullish, and you're seeing the markets kind of responding accordingly with a higher open in live cattle and feeder cattle. On top of that, you've got the cash markets and the CME feeder cattle index, which remain relatively stout, especially compared to where the futures are right now. So seeing a little bit of optimism to start the week in what is the last trading week of the month, which is crazy. It seemed like January was like 3 months long, and February is 3 days. But here we are. The thing that we're keeping a close eye on through this week is volatility. That's going to be the name of the game, especially when looking at the outside markets. We saw a big risk-off trade on Friday in some of those stock indices, and starting to see some of that spill over into this week's trade. If that does continue into the end of the month this week, I wouldn't be surprised to see that maybe mute some of the optimism that we've seen on the open in the live cattle and feeder cattle markets.
All right, let's move from proteins over to the energy market. Just reading here where OPEC Plus really is struggling with their next decision, what to do, whether to increase, decrease, or hold where they are on production. Thoughts?
Yeah, that's the big question, is whether or not they're going to extend the cuts. And I think a lot of this just goes back to end-of-the-month positioning. Again, a big risk-off day in the outside markets. That included crude oil on Friday. If you zoom out, the crude oil market, I think, looks pretty well in balance as far as supply and demand technicals go. So I wouldn't be surprised to see that turn into a little bit more of what I would refer to as a trader's paradise, so long as we can defend $68 to $70 below there, and you start to see a little bit more concern. And again, if we see the outside markets get a risk-off trade, that's going to raise concerns over global growth, and that could be a headwind for the crude oil market into the next quarter.
Yeah, that nat gas market had a 5% gain week over week last week. Month over month, we're in the red, but year to date, 7.8% higher. What about precious metals? Do you have an eye on those?
Precious metals have been flying around. Gold has been the all-time high weekly close last week. We're trading off of that here this morning, but I think gold has been hanging in there relatively well. It didn't really get a safe haven bid on Friday with the risk-off trade, but it didn't really sell off either. I think all in all, central bank flows into gold have been constructive. Silver, on the other hand, has been a big laggard. It's kind of stuck between a rock and a hard place, whether it's a precious metal or an industrial metal. If gold continues to set new record highs throughout the first quarter and into the second quarter, I would imagine that that spills over into some strength in silver and potentially see a little bit of a catch-up trade there.
Yeah, and I threw copper in there just for the heck of it. We don't get to talk copper very often, but Oliver, it's always great to see you, and we'll see you back here soon. Oliver Slope is with Blue Line Futures. We do get some more USDA reports.